Hello, trading has closed on February 10th, 2025. As always, we'll begin with our disclaimer, go over our calls, and then make our predictions. It's my trading plan for Tuesday. Tuesday is February 11th, 2025. Remember, this is a plan. I can change my plan. My plan can be wrong. Trade at your own risk. Look for the pattern with the early low, which is this. Tomorrow should also have the early low. We said this looked like pretty negative stuff, but it needs follow through, and if we gapped up, it didn't really amount to anything. So we did gap up, so that negativity goes away. Now we said all bears needed to do to continue the drop is to gap and take these lows out, but that didn't happen. We said if it didn't happen, if we didn't gap down smartly, we had higher targets. The higher targets were 60, 51, 47, which is right here. These are not just targets, they're also support resistance area. And we had 60, 63, 62, which is right here, and that printed too. So we didn't get the gap down, and our targets printed. It's a reminder of what we said. Well, we had some MEJT signals during the day, but they've already played out. The F means a false move. This drop retraced, this rally retraced. It's not telling us anything about tomorrow, so we'll have to use other indicators. We gapped up, hit a higher high, and the close, this dotted line, is under all these highs. And if that's maintained, and that's an if that's maintained, that's negative stuff. So unless we gap and take these out early, we should trade lower. Doesn't guarantee a close lower, but it's a negative pattern. We already had this as a candidate for a high, and that's negative stuff. So if you want us to go higher, you pretty much have to take these highs out early. I don't think it's too possible to count this wave pattern with a high degree of accuracy, but our general thought was that wave A in green and wave C in green would be equal around 58.64, and we're hoping that's where this leg ends. If we're right about that, and if we are in wave red C of green C, and if we stop here, and if this is A of red C, of green C, and if that's B, and if we drop 200 points to our target in a straight line, if this is going to be wave C, then C would be 261.8% of wave A, right on the nose. Now, just because the waves balance there doesn't mean they won't balance someplace else. That you don't know. But at least if we do stop here, it's a reasonable candidate, and if we do start down, we could drop 200 handles to get to our target, and you got to stop right here. So I don't tend to make a guess on these things overnight. I have no way of knowing if we're going to open up here or not. But if we don't, when we start down, you've got a reasonable target much lower, and here's a reasonable stop. I mean, you got a reasonable risk reward there. Tuesday's pattern has a really low regardless of where we open. Jerome Powell speaking tomorrow, and his comments can move the market in ways my indicators can't predict with a sufficient degree of accuracy, so don't bet the house on this. We gapped up, hit a higher high, but closed under intraday highs, and if, in capitals, if that's maintained at the open, it's a bearish pattern, should lead to lower prices. It doesn't guarantee a lower close. And again, if today's high holds, the waves balance out at our long-standing 58.64 cash area. So it's the pattern with the early low. If this holds, the waves justify a drop of about 200 handles. And if we break through this, then that count isn't going to be one I can stick with. So You have to use your own judgment about an entry there, but at least the risk reward at this price is pretty good. It's a pattern with the early low, and that's today's call.